Hey everyone. So in this video today, what we're going to do is go over the top 10 stocks that you should be looking at next week. I think 2 or 3 of these are already actionable as early as Monday, Tuesday. So we're going to dive right into it. Just a little housekeeping. You know, on every Saturday we do this where we go through a top 10 list. And if you've been following along, some of them do fairly well. I want to start doing a 1 or 2 minute recap just in the beginning of what's going on with these names because of people that are entering these apparently and doing quite well. But that way you have a little bit more of a plan. So this was one from last week that we got into, BNTX. I talked about the 204 level, and you could see how it was just getting tighter and tighter in here. And then eventually you just broke out of the rip. So you could just kind of see how this was curling, and then that's kind of what we were looking at. So it's becoming decision-making time on this one, and that's why I wanted to cover it. You're going to have to figure out what you're going to want to do. And I just want to give you a couple levels to look at, okay? So the first one is right here, okay? You can see clearly how you're sitting right above that. Now, if you break this level, this will push. When you break an upper channel, you will push, but just be aware that that's there right now, okay? If you want to get super technical with it, you could do this and say, hold on one second, and see this other one that's here that's right on top of it. Okay, so there's another one there as well. They're both there, but the one that's really important, let's just remove the segment line, but the one that's really important is this one. It's been following this channel. See how it got right up to here and rejected all the way from back here? People were watching this breakout, wondering when it was going to stop, and that's where it stopped. So this has been one we've done quite well with, but just FYI, now that you're up at this level, you may want to consider, having a plan in place. We did move fairly quickly. And if we just look at this on the weekly, I mean, you can just see this is just beautiful. And you can see how you're broken out here, and you can see where weekly support would be, which would be right there. So just keep that in mind. There is very little resistance obviously up here, but you could reject from this level and come back down, retest, build before going higher. That is possible. So that's the first one. The second one we should go over is 10, TEN. Now, I've stated for some time, probably over the last 2 weeks, that this could be a monster mover, and it really is shaping up very well for us. From last week when we started talking about this, we're up, 40% in like a week. I mean, it's pretty staggering move what we had. So what I would do is try to understand that move, right? And try to understand what you're supposed to do now. And I'm just going to point out a couple of very key things here that I think you need to pay attention to. It's very important that when you draw your weekly resistance lines, you leave them in daily charts. So I'm just going to say that again. When you draw your weekly resistance lines and support lines, make sure from weekly charts, make sure that they permeate throughout your daily charts. So this is a weekly resistance line or a monthly resistance line. I don't remember. So we're going to draw back. Yep. So what you can see here, and we can actually get rid of this one so that we're not in the position that we have to sit there and stare at that one. And let's blow this up a little bit and open this up and really get in here. So what you're seeing just on this section is what we're looking at is we got right to the top of the breakdown bar, right? This red bearish where it's going to zero kind of move, rallies, comes down, right? You can see the whole trade. Okay. We got through this one very easily, and then we hit this 21.25 like a brick wall. So we have a decent trade here in a week. So just keep aware of this. This is where we thought it could go to, and it's gone there. I'm not saying it can't go higher. It can. They can always go higher. And you could really just start moving the levels up on this. You'd go to, this would be your next level, 26, and this would be up here, 37. I mean, it can keep going. But this is a major resistance, and you just need to be aware of it. That's my point. And you can see how we're responding to that level here on the daily. So I hope that's helpful as far as an update for those two and what to do from last week's top 10 list. And let's just jump right into it. So the very first one, and these are not in alphabetical order. There's only 10 of them, so I just didn't do it this time. So let's just jump right into them because there are some here that are extremely actionable. So as always, subscribe to this channel, click the notifications because we do pre-market shows. and live shows as well that are, the pre-markets are live. But also Sunday night at 6:30 Eastern Standard Time, we'll do a Q&A for at least an hour so people are prepared coming into the week. BNGO here. I've been watching this and I love the name. And, you can look at this on the weekly and just see what's transpiring here. And let me just show you this and how this is changing after this week. Okay. So now look at this line after 1 week. So it's just perfect. It really is perfect. If you draw these, and the lines move based upon the volume and the velocity of the move, right? So that's what you're looking for. But I think it's really important that when you draw these just super technically and super properly, right? And you get into the detail, like look at this. Even this week, what was the open? Right? The week open was here, and then we just got down to here to test, ran back through the open, and ran into a resistance. So this is pretty key for BNGO on a weekly. And there's some other things that we're going to go over and some other indicators I'm going to throw at you so that you have an understanding of what to do here. So, but to really drill into BNGO, you see, right? Lower low, lower low, lower low, or I'm sorry, lower high, lower high, lower high. And then lower low, lower low, lower low. So you have this channel here, right? So let's just do this for a moment and really drill into this because to me, this is important to understand. And I don't want to overlay everything so that you miss it. So here's your channel, right? Just roughly, here's a channel. You always clone these lines and then you just put them where they fit. Right? That's what you're trying to do. Find out where they fit. You find the one that is the most accurate, and then wherever they fall, they fall. If they don't look pretty, then they don't look pretty, right? It's just the way that it is. You can move this up, but technically we've broken it so many times now that it really doesn't matter. So you want to just move it down a little bit towards the end of this if it doesn't fit anywhere, so you can get an understanding of where you're at. You can see how we moved it down here, how it just happened to fit in here now. Okay, so it's really important just to understand that you clone these. You want the same trajectory. So that said, here's where you're at on the daily and really what people should be looking at. People can wait for the 775. My personal opinion is even the selling down on Friday was just Friday, get me out. I want to just see what the weekend brings. I'm concerned, which is perfect action. I absolutely love that kind of action. But look at this, even at the end of the day, and this is with post-market data, and people started buying it. So I would make an argument that if you overlay the indicators into this now and put your moving averages in, right, you can see what's happening here. I could make an argument right now that it's actionable just clearing this wick. So I would not buy it until you have follow-through at this point, right, which really puts you at that 735 level. You'd want to see a higher high here. You don't want to buy it with just the wick here, and just in case you base for a period of time. But you are through some of the sticking points. And I'm just going to walk you through a couple scenarios here so you can understand a little bit better. And we're just going to use a couple indicators. So the very first one I'm just going to throw in is pretty much one of the only leading indicators. There's a couple more, but we're just going to stick with this one for now. So we're going to just look at the RSI and see if the RSI is going to tell us anything about the move. Well, here's 773, right? And here's 734. Okay, so we're here, and now we're here. So do we have a positive divergence? Yes, we do. So the magnitude of the move setting up is greater than it was previously. That's what this charts, RSI charts, the magnitude of the move. Okay, here's your trend line. Does that look remotely like what's going on? Not really. We have a nice little move off the base here, but it does not have that trajectory associated with it. Okay, how about our longer term downward trend line? Did we do anything there? Did we break any of that? Oops, let me get back to that. I don't know how I clicked off of that. I wish I learned. I got to learn how to do that because I got off of that so fast. There it is. And now I got to figure out how I'm going to get that back on. Hold on, let me just get rid of it and do it this way. There's probably a much easier way to do that. There it is. Okay, so, you know what it is? It's that little button right there, that little green button that I just missed. How about that? So you see this right here? It's this green button right here. You can click on and off of it from there. Toggle visibility for resolution. Wow. Learn something new every day. All right. So see this trend right here? You see how you broke it? And now you're pushing higher. So you have a positive divergence. You're breaking your downward trend line. That's following, and your higher highs and your upward trend is not really that significant here. To me, it's not. Some people could make the argument that it is, but I don't see this kind of velocity already representative here. That's just my personal opinion. So let me just toggle that off, and we'll go from there. So the next thing I want to just show you real quick on what to do with one of these, and especially this one, is just look at a volume profile. Okay. And a volume profile basically just tells you who, basically volume profiles are who owns what where, right? I mean, that's really what you're getting at. Okay. So you just throw that in there and go, who owns what where, and go, all right, well, this shows you pretty clearly. Let's get rid of all these indicators, and we'll get rid of all these lines so you can drill into this. Okay. So what is this really telling us? And let's drill into this. Okay. And let's expand this just a little bit more so we can really say it. So, right. So this shows you where a point of control is, and that's this line right here. It shows you, the purple line shows you where the point of control is in regards to where the volume shelf is. That's the way that I interpret the data. So you can see once you got above this point of control, how the stock then started taking off. So now you have this shelf and all the support of all these people down here, right? Pardon me, protecting you in a sense with their support. So now on top of that, you start looking at what's going on up here. See how it gets less and less and less as you're going up? That means you're going to have less resistance when they go to sell. Because people that are in here, some people are just sitting there waiting. We all know this. We've all been there with that kind of trade, right? Where you're in there and you're just waiting for it to go. So just keep that in mind. When you see like a shelf like this, and this is a tool that you may want to consider using, and you look at where point of control is, which is usually just happens to be where the most volume is, right? This is a very easy way of looking at where that volume is across the board. That's not very indicative of when you just look at volume. It doesn't get that specific. So just keep that in mind. This is one tool that it's not a leading indicator, but it's a nice way of seeing what level is important. And I would recommend that you might want to start using it. So the question is, what do we do now that we've gone over all that? Well, it's very simple. The 735, I'm going to use that as an actionable level. I'm not going to wait for this. And of course, I'm going to wait to see the indicators and the volume coming in and make sure that the pattern is correct and the stop loss profile and everything as you should do as well. But I like this, and I think this has massive potential. This is not going away. This business and that they're in, it's just not going to go away. And if you break one of these wicks, just for a point of reference, how I'm going to get to this target price. Okay, when you break a wick like this, or you break a wedge like this, I should say. So you're going to get to here, right? I was just looking at this wick and thinking about it breaking. But when I get to here, this 1153, okay, that's where I think I can go. I think you have that much potential with this. This is not something that is going to be a short-term trade. This is something that you're going to have to build and base and leave on and forget that you own. And you are subject to binary events out there with it, but I think that you have a shot of over 50% here. I think this is one that should be on your radar. So I've been waiting a while for this one, and it's definitely there. So let's just keep rocking and rolling. So this one to me is actually actionable, and we're just going to get right into it. Let me just put this up here. AMEH, I don't know why that's in that pink. Let's get rid of that and click this and put it on display. All right, so AMEH is next, and just show you what's going on here. So from this point on, and you broke, and look at how this volume's picking up, right? So you can see the break here, and you can see the test down to the 21, and you didn't break it. Somewhat of like, get me out, and then everybody's like, now I actually want to be in it, and then they keep buying. Now, overlay that and keep this picture in mind, and look at what you're dealing with here. Ever since you broke out here, ever since you broke out of this base, this has just been on a tear since January. Just an absolute tear. And I don't see any sense of why this is going away. All it's doing is setting up, forming a flag, breaking out. Setting up, forming a flag, breaking out. Right? Setting up, forming a flag, breaking out. I mean, it's over and over again, right? And that's what it's doing right now. It's setting up, right, to push. So what do we need to do? We have to understand that, after a little move like this, maybe that's enough for a period of time. And we don't want to be stuck in a flag, right? So we don't want to be stuck sitting in the flag like this for 7-8 days if we can avoid it, right? I mean, some people don't care. I care. I want my money to constantly be making me money. So what I need to see is it break a higher high. 37.25 would be your trade on that. And look at this. And this is why I think that it's imperative that you learn how to do this. So you have this one here, right? And this one here. So take a look at this one. This line doesn't go away just because you broke out of it here. See how you broke it here and then you fell back down under it, right? And then you retested the 21. I point this out a lot. When you break out of these upper trend lines and you at least have a 200-day moving average, you'll revert to the mean. Your mean usually is your 21-day or 20-day moving average. And why is that? And just to give you an example, it's just how it's calculated through standard deviation. Here's Bollinger Bands. And you can see as you break the upper Bollinger Band, and that's not a signal, but if you break the upper Bollinger Band, what happens? You revert to the mean. I mean, that's the trade. And then when you get to the mean, people will put the trade on and then see if it trades back up. So just keep that in mind. But in regards to this, what do you do now? So you need this to break and understand that if we broke one of these, the chances are we're going to break another one. So I'm expecting this to head up and go parabolic, quite frankly. But I need to see it break that 37.25 level, and I'd keep that up there. So this is a name that people are going to recognize a lot. And I don't think this NFT space is going away. I think that there's hype and some companies are going to do better than others, but the ones that are true collectibles like Playboy and, Topps, I think they're going to be around. And what format, I just don't know. So here you are on the daily, and we're getting ready for prime time, but we're just not there yet. As you can see, this 49 level, 49.50, continually is just rejected, right? So what's going to happen? Well, we don't know. But these wicks, as we all know from looking at that video that we did, is price rejection. And as always, we know that we don't want to be involved in price rejection. So what do we do now? I'll link the candlestick video again for those that haven't watched it at the end of this video. I'd recommend watching it. There's 5 specific patterns that you could, if you start recognize, you'll do infinitely better, especially if you're a beginner. So look at this base and how you're just basing and bouncing around in here, right? But what's happening here? Well, they're walking us up. Let me explain what walking us up means. Okay, see that line there? And then where's the next line? Right here, right? So they're constantly walking up very quietly where they're selling. So that means that the selling's drying up. Well, that's interesting. What could tell us when that selling's done and when this might move? Well, let's think about that. We just went over this. Maybe this could be helpful. So let's just throw a volume profile in there and get an understanding of what's going on. Okay, well, that's interesting. Here's that purple line. Wow, look at how when you get under that, it doesn't stay under that line anymore. Look how it's getting higher and higher on that line. Okay, so to me, that's the point of control that you need to pay attention to. I hope I'm making that clear. And it takes a while to understand it, and it's not a do-all, be-all, but it's one more data point that you can look at and go, huh, that's interesting, and then boom. So now the question becomes, what do you do? Well, let's just get rid of this for a second, and let's just say, what else could we use to figure out what's going on? Well, we could use RSI. Okay, well, let's use RSI, and we're going to toggle that on now that I realized how to do that. For those that ask, I'd use Trend Spider. I like it. I'm just starting to get used to it a little bit more. I like it because it's web-based. There's a link in the bio, and they give you, or in the description, and they give you a 7-day free trial. So this is not really telling me anything, right? This is not giving me any love whatsoever or adding any value. So this is not something that I would say that consider that is telegraphing anything. It's not. So let's just zoom out a little bit more and look at the weekly. Well, here's your weekly level. See how you're just hitting these lines? Boom, boom, boom. So as soon as you break out of this, which I think you will, and again, you essentially, you can do this. It's easier for people to understand it this way, but let's just throw these in like that, right? So people can see this. So, right, you kind of had an inside week here. You didn't have an inside week here, but now you have an inside week again. So this is setting up and getting tighter and tighter. I think you need 3 to 5 more days for this to set up before it breaks out. And let's get back to the candlesticks because I like candlesticks. So I think you have 3 to 5 days for this to break out, but this is the channel that you're out of. So look at this. We're just going to clone that because that's what we do. We clone these lines. And why do we do that? Because you need to figure that out to find the true trajectory. So now you see how you're going to go up. You pop out of here and you get back in this channel, right? I mean, where are you going? I think you can get to $80. I think this could be monster. And I wouldn't be surprised to see this in the newsletter. I think that this could really be just an absolute huge winner. And I would definitely put this on your radar, but you're just not ready for prime time. So let's walk through this. And what I'm looking for here, so we're clear, I want to break this line and this line. So 49.50 for those, I don't think I was abundantly clear with that. So let's get to this. Okay. ODP. Okay. I think this is actionable now. You have an enormous trend here, like enormous, right? And you're heading up and you just broke this base. Look how long this base is. This base is 6 months old. So you have a 6-month base here on this, okay? This is not going away. Like this is just not going to stop. And one of the key reasons you can look at that is look at this volume that came on. And one of the things that I was trying to explain to people the other day was just sometimes you can just look at relative volume. Like, yes, I just don't know how far that line is off that 30-day. Well, what's an easy way to do that is to look at relative volume. So what you could do is, let's just go here and I'll show you how to do that. It's very simple. And there it is, relative volume. So you just click that, click apply, and then you can just look at it very quickly and eyeball it, when you're looking at your charts and going, oh, wow, it's 2.5 times normal average daily volume. And that's really all you need to see. And then you just click off of it. So now that I know how to do that. So you're seeing this break here. This is huge volume on a break that went. See how we didn't go here the first time? Usually the first time we don't go, it's the second time, right? It's usually the second mouse that gets the cheese, right? The first one gets the trap. So just keep that in mind. You don't give up. No one likes a quitter. And then you just come right back in. And so from this level, you're looking at this 50-14 level, and you want to get back up to here. And I think you can see 58 on this. So this is a trade. There's a 20% trade here. I like this idea a lot. Different space, obviously. You're in retail, but I do like the name, and I do think that this trade could work. If you want to just take a look really quickly at the weekly and give you some color, you can just see how you had this enormous flag pattern and that you've just broken out of, and that's why I think it's actionable. And you can see the probability, of this going higher with very little resistance in here. I mean, you can even see this level up here, which is 62, right? You have a couple levels here that are just like 62, 63 is going to be a spot where people are going to probably, lighten up on it, but you can just see how it's acting here. It's acting exceptional. So let's go to the next one. So net. So let's talk about net for a minute, and let's just focus on these levels. So this 82.67 level is something you need to watch, and then you need to watch what's going on here. But look at this. And this is just on the weekly chart on net. See how that's setting up? We've been waiting for this one again to move, and that's really what we needed to do. We needed to move. So what we're going to wait for here is we're going to wait for a solid break of it. Once we get that solid break, we'll be in good shape, right? So that's what we want to say. That's all we're looking for here. I'm looking for a solid move higher, and I think we're going to get it. I think we're going to see it finally. And you kind of remember, like, these stocks, and I know it had a bad day the other day with earnings, these stocks have been moving and been monsters. And this is crowd, right? And so this whole space, okay, so we came in, we have a weekly engulfing. It's not the best, but it always sells down after earnings. So just keep that in mind. And here's the cloud space in general, right? Just kind of basing in here. And this is just, the ETF for cloud. But you can see how you're just basing in here. And every time you retest, you're finding a bid. So it's telling you that there is interest in these names. So a break above this level, which is roughly $84, is what we're looking for. Okay. And then if you look through this, and we don't really need these levels anymore, but you can see how you undercut here. You can see how you ran and respected this trend line and you never broke the 200-day. And after you didn't break the 200-day, you just constantly were just trading up. Now, you could roll here and come back down. So you really need to be careful. But the very first thing to do is get above $84. And then, you're going to be looking at that 87 would be next. And then when you get up there, there's very little volume. And just so people get comfortable with it, I'm going to just throw in this again so you can take a look at it. And where's your point of control? Okay. Where am I talking about? Right? See where I'm at? And look at where your point of control is. So your point of control on this just happens to tie directly in with your downward trend line. So it's interesting when technical analysis comes together. Let's remove this. And I'd put that one on your list. So AMAT, this was one that we recommended 2 weeks ago in the top 10 video for the week. And we did it at like 131 and we covered it extensively in our pre-market videos. So I just want to drill into this again because it's giving you another opportunity here. And that opportunity is 142.12, right? So getting above that wick, this is going to push and go. Now that I'm above this 138.67 and drill into this and pay attention to the details. The devil's always in the details. See how you're getting above this and you're finally staying above it? Look at your little Morningstar pattern right here and how you completed your Morningstar pattern. And then you can get to the 142.12, 146, right? So you're setting up here. So you are setting up here. And I would just consider that getting through this, you could get a push. This is something we were in from the newsletter, and we did very well with. And then when we got up into this level, I just stated you probably want to get out of it. So, and the reason was there's just too much resistance up here. But if this continues, if you look at the stocks, if this continues, we're going to break through this. If we break through this blue line, you're going to take out highs. You're going to take out highs on semiconductors. So just understand that. That means the NVIDIAs of the world, LRCX, ASML, like they're all going to go. They're all just going to, like ASML, like that's just, they're all going to run like that. It's just going to happen. So just keep that in mind. But what you're looking for here in this particular one is the 142.12, breaking through that, and I think you can get up to 153 fairly easy. Very easy. So this name is for me is really just a trade. I'm not a huge believer in fintech and these names, but this is setting up, and you've seen the moves in these names, and I think it's just going to play catch up, and that's why I like this name. But I mentioned this one on Twitter the other day, and you can see how it took it a new high, and no one was paying attention to it. And this one's same space, taking out a new high, right? Everybody loves this name. Look how this one broke here and took out a new high, right? So they're all doing it, right? That whole space is on fire. And frankly, it's because Tiger had just huge earnings. But let's get into this one and why this one may be actionable. So you have this enormous downward trend line here, and you have a huge following that is just watching this over and over again. And what we're waiting to see is we're waiting to see what we do here. What exactly is going to transpire here? Okay, so let's go through this. Okay, look at the point of control. You see how I'm trying to introduce, for those that have been following for a while, I'm trying to introduce indicators so you can understand where they're being used and how they're being used, right? So everyone's looking at this line that uses volume profile, right? And look at where all this volume is. So if I can get above the point of control on this, what's going to happen? Well, this should go higher, right? I mean, very simply, if this breaks out here and breaks this should push because I don't have as much resistance as I have here. So keep that in mind. I really like this idea. Again, I'm not a huge fintech believer, but I mean, this especially at this price. I mean, back here, obviously, and the move was just staggering. But what you want to see is just how this plays out. But a break here takes you to this high, takes you back to $200. It's a nice trade. So just something to consider, but I would definitely put this on your radar. Definitely. So this one's been around forever. It's obviously a large cap stock. It really doesn't need an introduction onto what they do. It's been around for a long time. why I like this trade here. And, let me just do this and get rid of all these horizontal lines. And let's get rid of all the indicators for a moment. And let's get rid of this segment line. Okay. So what you see happening here, right? You're hitting the top of the channel, the bottom of the channel, the bottom, the bottom, the bottom. But what you're starting to see here is you're setting up, and I think you're going to run. And I'm going to show you why I think that before it even breaks out. And I don't think that you need to even wait at this point. This is a really simple trade. This is your stop, 247. If you take out a higher high on this, I think it's actionable. I don't think you need to wait for this. And I know it's a little aggressive stating don't wait for that, but you're not really looking at a ton here, right? So you have to try to figure out, when you're not looking at a ton, you have to figure out how you're going to get every edge over everybody else, right? Because we're all looking at these levels. Well, the majority of people are looking at these levels. So you have to just understand that. And you can see this channel pretty clearly, but what we want to see is we want to see this breakout and go here. Now, why do I think that this is going to happen? Well, let's just look at a couple things, right? Okay. So this is not really giving me any indication of why that's going to happen, right? So that's the first thing. That's not really offering me anything. So let's go back and see if RSI, if we use that, if that's going to offer us anything. Okay, so that's not really offering me a whole heck of a lot either, is it? Okay, so what else could we use to kind of figure this out? Well, what we could use, if we think that we're onto something, is we could use something like it's a major index that it's in. All right, well, it's 25% or 22% of the XLK. What's the XLK doing? The XLK is breaking out. So if I'm 20 to 25% of a sector, there's absolutely no way that I'm not going to go up if this goes up. It's just not going to happen. And what you saw on Friday, which very few people are talking about, everyone's watching, energy's huge move, which was very nice. But finally, part of the S&P, we're breaking out. So S&P Tech is breaking out. Well, what are those names? Well, there's two names that are 40-something%. One is Apple, okay, which to me still has some work to do, but this bounce off here in rejection is telling me that that could be possible, but that's not really actionable to 127 because it's been rejecting there so many times that I might as well just wait the $1.50. Okay, but this is telling me that I have come down, I have rejected, and guess what I'm doing on the move? I'm being bought, and this has a much better relative strength than Apple does. How can I say that? Here's your 21-day, here's your 50-day, right? You're above both. Where are you on Apple? I'm below the 50-day and I'm below the 21-day, right? Just something as simple as that can give you an edge and understanding where you're at in regards to, which one's going to have the higher relative strength, which one's going to have the greatest move, right? You're always looking for an edge. So Microsoft here, to me, higher high off of this, which is 251.65, is actionable. And I think you're going to push up to this level. I don't know that you're going to break out and, go crazy, but I think you're going to break out of this level and break to that level. So this is a name that I really haven't mentioned a lot before, but it's one that I've been in for a long time trading. And usually I just try to get people, I did it on a short video, like squeezed the short video a while ago, and we did okay with that actually. Let's remove this. But what's happening here is we've been basing now, right, since almost November. Like if you really go back, you can actually say the bottom of your base was this, right? You can see how it tested. And let me just blow this up and get rid of this so you can understand what I'm talking about. So if you find this helpful, do me a favor and please click the like button. The more likes that I get, the more people I get in front of. And what my goal here is to get people to understand what it takes to be truly successful in investing and trading. So here's this level, and we really don't need both of these. It's kind of like overkill. Let's put this here. So you can see this level, right? And this is going back. Wow, we're actually going back all the way to this breakout here in September. Wow. Bonk, 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 right? So what is that telling you? There's your support level. Where's your resistance level? You can say it, right? You can actually move this up and actually say it's wider. You can actually say it's right here. And let's get rid of this wick wedge. We can remove all these for right now. So look at this, what's going on here. Now, this is all you need to pay attention to. Okay. this is setting up. When I finally break out of this, and you see how you undercut here, this is very important to understand. When you have a support and you undercut that support, right, it's not really a double bottom because you 14 times you hit here, right? But you could argue that it could be construed as a double bottom from breaking this, right? That could be an argument, right? So this was the low of this base after we broke out. Therefore, this is the interim low of the base, not here, but here. And then we had that one day where we broke down and reversed through it. So you could argue a double bottom. What I would argue is that it doesn't really matter in regards to this. The bottom line is I cut down, and when I do that, an equal and opposite reaction may happen, okay? And we might flip up this over this now. So because people want to buy this stock. So what you're seeing is you're seeing some volume in here, but you're seeing a nice move right to here. And let's just look at this. Let's throw these indicators in for a moment, okay? And let's just do this one more time so you can understand this and see where we're at, okay? So here's your volume of control. So that's not really telling me anything down here, right? But look at this. Look at what's going on at this level and how this level sticks out right across to all the other levels. Well, that's interesting. Let's just draw a line there and just see what's going on, right? So that really puts us here, okay? And you can see now, we'll get rid of this, and you can see this line that's just there for telling us where the majority of volume is, that we're now above that line for the past 3 days. So that's telling you that even though you're not at a true point of control from where the stock is, right? You're at a spot where it's pretty significant volume. And now you're above that little shelf. That's not the major shelf, but you're above that. And we're not going to wait for it to come back down here, obviously. So what you're going to wait for is you're going to wait and see if it breaks to this level and then pushes through. And if it does that, we're in good shape. But this has a couple more days of work, possibly towards the end of the week to do this. And you're really looking for about a 287 move before this becomes actionable. MDB. So I really like this move, and this is one kind of pattern I want to kind of walk you through. So it doesn't get more clear than this. And let's just throw relative volume in for a second so you can see what I'm getting at. See how relative volume gives you a much clearer picture, not on the volume in and of itself, but where does this stand relative to what's going on in the world? Well, this is pretty much the highest relative volume that we've had since, what, 2 years? Okay, well, that seems significant. So that could be a data point that we could use. But what's really interesting is just, this is just reading price and why I think that this one's so important. Here's your support level. So on Thursday, you come down to your support level and you test it. And this is about as nasty as a red bar as you can get, right? You open at the high, you close at the low. It doesn't get any nastier. So the next day, look what it does. It gaps up over the entire bar and opens right at the old open. So everybody that sold here to get out looking at this position that wanted to be in it is out now, right? So this essentially is called what we call them as screw bars because for obvious reasons, you sold here and now you can't get back in. So now you have to pay up. And you're like, oh, I don't want to pay up. And then you watch it start moving. And then people start getting involved with it. And then you realize that, you just got shaken out by someone that was playing a game. And there it goes. And now it's off to the races. So what are we looking for here? 324 is going to be an issue. But very simply, when you start moving like this and you have this kind of power behind you, you're going to see another big day coming. It should be this week. You should see more power behind the move like this. So what I'm looking for is just break this, move this one up so we can talk about this. I'm looking for a 318.77 move, and then we'll go from there. But that's really what I'm looking for. And you have this resistance here, but we'll see how that plays out. I think you're in good shape here. You're going to have to watch the opening bar on Monday to kind of get an understanding of where you're at. But look what you're seeing here. You can see how it's respecting these levels and starting to point up. And I think that this has a nice shot of moving. And I don't think 324 is going to be a big issue for it. But that said, you're going to start walking up here. And once you get through 324, there's very little resistance until you get back up here, which is like a $400 stock. So this could be something that moves over the period of a couple months that you can do very well with. So that's it in a nutshell. Any questions, feel free to leave a comment, let me know. And as always, have a great weekend.